Hey everybody, what's going on? It's James here with Crypto Common Sense. Wanted to shoot a market update video for you. It's November the 10th, just after 6 a.m. Central Time. So our daily close is just under 12 hours away. Of course, that will also be our weekly close. So before I jump into this video's content, please do me a huge favor. Go ahead and hit the thumbs up button on this video, and don't forget to subscribe to the channel for daily updates if you haven't already. So I want to talk about Bitcoin today. We're going to take a look at some charts. We're going to take a look at some inverse charts, and we're going to take a look at some of the sentiment over on Twitter and kind of get a gauge for what's going on. So the first thing I want to look at is this short-term chart, because I know a lot of people are interested in intraday trading, or at least like the here and now. So this is a daily chart, and essentially what I'm looking for, guys, a lot of people have asked me this on Twitter and also on various social media outlets. What am I looking for to turn bullish? I outlaid that in yesterday's video, but in simplest terms, the first thing that I need to see is I need to see a break above this red line. Okay, that's really, let's just keep it simple. If we break above the red line and we close above that red line on a daily candle, I would probably turn off my bear bias and go neutral. And then from there, I'd be looking for some type of structure to tell me what was coming next. But for right now, I'm going to remain bearish, okay? So let's go ahead and zoom into a 4-hour chart. This is not a trade I took. I started to take it and I didn't, so don't need that there. But essentially what I was looking for yesterday, and I did not get it, I was looking for some type of pump up to this level. And I toyed with the idea of going long, but ultimately, all I did was take some day trades. I took 4 day trades yesterday. 3 of them worked out, 1 of them failed. So, wasn't a good day overall. I didn't make a lot of money or anything like that. The 3 that worked out, I had to close them all early. And when it was all said and done, I was basically even on the day, because the one that didn't work out lost more than the 3 that did work out combined. So, and it wasn't a bad risk-reward ratio. It was just they just weren't getting to their targets. I was having to close them early. So today I'm probably not going to do any kind of day trading unless something just magical comes together. This is really, really low volume stuff, and it's really, really hard to trade these tiny little ranges. Not hard in the sense that it's more difficult. It's hard because there's not enough meat on the bone. Okay, so you might get a setup that comes in that would normally produce a 1%, 2%, 3% type of move, and it comes in this tiny little range and it moves $50, right? And then after fees, you're making, if you're right, you're making $30 or $35 per Bitcoin if you're lucky. So not enough meat on the bone to really day trade. I'm going to have to sit out until this thing decides what it's going to do. Ultimately, what I would like to see this do is come back up to this level up here. Now, the reason is and I don't know if it's going to, but the reason is very simple. Number one, that is the 61.8 Fibonacci level from this local move, right, which is my golden short zone that I'm always talking about. Also, this red line here, you see that it says over here MA 1200. That's because this is the 4-hour chart. What that actually is a 200-day moving average, right? You have 6 4-hour periods in a day, so 200 times 6 is 1200. So our 200-day moving average is right around $9,200. So if we could come back up here and test this, then I would be looking for a short entry. What I'm not going to do, finally learned my lesson this year, what I'm not going to do is get impatient and decide it's not going to get there and try to short it down here, right? That's been the one thing, I haven't had a lot of losing trades this year that cost me any significant amount of money, but the 3 or 4 losing trades I had that did cost me a significant amount of money, they were all the same thing. They were all me deciding that a target looked good, but then getting impatient, deciding Bitcoin probably wasn't going to make it there to my target, and then jumping into the trade early and then getting stopped out, which is exactly what happened when I went short down to the low 8,000s. So I am going to wait patiently, and if it dumps without me, it's fine. There's always more trades in the future. Remember this, you can't lose money you don't invest, right? I mean, you can through other means, obviously, but you can't lose money in the market if you don't put the money out there to begin with. So sometimes the best play is to simply wait and be patient, and that's what I'm going to do. All right. The problem I'm seeing with it, the reason that I don't know that it's going to get there, is we have this downward sloping trend line in RSI. Again, this is a 4-hour chart. So for it to move all the way up to this level, it's going to have to break through this resistance. Then, if it does break through this resistance, it may not stop at this level. So this is looking like it may not come to pass. Now that being said, if you are paying close attention, we have a bullish W trying to form. So this is one of the reasons I will definitely not be looking for shorts at these levels. Right here is basically the line of resistance right around 88.80, okay? And this could also be called an ascending triangle. Well, we all know that ascending triangles tend to break north, and if we measure this move from the bottom here up to this neckline, that's right around $228. So if it does break out, look at this. Breakout target would be right around 9,100, a little over 9,100. So that's kind of what I'm hoping happens. I'm hoping it does break north out of this triangle. I'm hoping it gets up to this level, and then I can open up a nice short position, okay, assuming that it's still backed up by the charts and everything. Again, I can't just say for sure I'll go short there. It depends what's happening when we get there, if we get there. But not enough information to go long on this, okay? I can't just long it just because I see an ascending triangle. I mean, theoretically I could, but the losing percentage is going to be pretty high. These triangles have almost a 50% failure rate, right? A lot of people don't realize that. They think a triangle is like a really for sure thing. It's not, right? They fail about half the time, right? It's a little less than half. I think it's like 60-40, something close to those statistics. So it gives you a little bit of an edge, but not enough edge that you just want to go all willy-nilly and decide you're going to put a bunch of money on a trade without anything else to back it up. So that's what I'm looking at on the 4-hour timeline is, you know, some type of pump. Now, what I want to do today is I want to do something a little different, and I want to look at a chart. And what I'm going to do is I'm going to turn the RSI off, and I'm going to turn these lines off for just a second. So a lot of people, they're so blinded by their bullish bias. And I did a little experiment yesterday. It was interesting to see the result. I had the hiccup. Sorry about that. Hopefully that gets edited out of the video. So basically, we had this triangle, right? We've all seen this triangle. If you've watched any of my videos, I've talked about this triangle now since July. It's the triangle, okay? And we broke down. So now, what we've been doing is putting in the smaller triangle here, which I also talked about in past videos, and now it broke down, okay? So people are getting super, well, not all people, but some people are getting super bullish because they're saying, hey, we tested this neckline and now we're going to go back up. That is actually a possibility. It's a valid possibility. But here's the problem, guys. In reality, we're just in the same big triangle. It's just bigger, right? I'm going to use a ray. And the reason I want to use a ray is because it's going to automatically draw a straight line so that I can't manipulate it, right? I'm just going to connect this close to this close. That's all I'm going to do. Now you can see that this close also stopped on it. It acted as resistance. You can see it acted as resistance. You can see, yes, this huge pump did break above it, but it closed well underneath it, acted as resistance, right? We never really closed above that line in any significant fashion. And these were all false breaks, right? This was a big enough break that it was a stop hunt. It stopped out a lot of people. And what happens in a case like this is you have people who are setting their stop loss just above this level. So if the whales can push it up to that level, those stop losses start triggering. And a stop loss on a short position is a buy order. So that buys it and pushes it up a tiny bit more. Well, then that triggers another stop loss. That pushes it up more. That triggers another stop loss. And you basically have a domino effect where they just keep triggering, right? So you get all the way to the top here, and then there's no stop losses left because everybody that was short was just stopped out. And that's when it starts to immediately dump back down. And if you look, this daily candle, this was massive. This wick right here was one of the reasons I remained so bearish. Yes, this candle topped out at $10,540. Had it closed there, I would have had to flip to a bull, no doubt about it. But it didn't close there. It closed way down here at $92.59. Guys, that's a $1,300 drop from the top. If we measure that move from the top of that wick to the close, it dropped 12.15% before the daily close. When you have a wick being pushed down like that, that signifies that the bears are in control, that you have more supply then you have demand. That's why it got pushed back down. And then again, it broke above the resistance, but got shoved back down. Tried to break above the resistance, got shoved back down. This is very, very bearish, okay? So then what we do is we can draw our second line. We'll just draw it right here. And this is a perfect descending triangle. But when people see this, a lot of bulls or a lot of perma bulls, I actually had a guy draw this yesterday on Facebook. He said it's going to go down here and then break north. Guys, descending triangles aren't supposed to break north. Now they certainly can break north, but they're not supposed to, okay? So watch this. When they see that, you have the bulls who refuse to, acknowledge that we're in a downtrend. They think we're going to do this. So let's flip this upside down. But if I flip it upside down and I invert the scale, the same bulls think we're going to do this, right? Because now this is an ascending triangle. Now they want this to break north, right, through this flat line. But if I put it the regular way, they want it to break this way, the wrong direction, okay? And I find that inverting these charts can sometimes really help to paint a clearer picture, because when I put this chart like this, when I flip it upside down, most people see this and think, oh God, that's going to break this way. It's going to break up, right? Most people think that. But the reality is up is actually down, right? Look at the prices, right? That's an inverted Bitcoin chart. And if I zoom out, that's the call of the perma bull is we'll zoom out. Okay, well, if I zoom out, suddenly this looks like one big leg up, leg down, and like it's due for another leg up. So again, if we flip this around, what does that actually mean? It actually means that it's down, up, and due for a leg down. Okay, it's a very, very, very nasty looking chart. So I don't know that I really want to go back and talk about the same stuff I talk about every day. Just real quickly, in case you're new to the channel, I would highly recommend you watch my other videos previous to today if you're curious about my big outlook. To run through them super, super quickly. Bear cross, right? Death cross, that's bearish. Red line of resistance, we need to break above it to turn bullish, need to stay underneath it to be bearish, right? On a weekly chart, we're inside of weekly RSI, right? Bear market RSI. We actually had 21-week moving average. It's way up here at 98.51. We weren't able to break through it. That's a bearish sign. It failed. Our 12 EMA on the weekly, which is support in a bull market and resistance in a bear market, sitting around 91.21. We're underneath it. It did not act as support the way it was supposed to. It failed. That's bearish. Just bearish, right? In the big picture, we came down, moved up to the 61.8 short zone, and moved down, which is very bearish. This red box down here, long story short, it's a old area of support, an old area of resistance, flip support, that when it broke out, it never came back down and retested. That's a bearish sign. It's sitting around $1,350. On the 3-day chart, this is the 3-day chart. Again, this is bear market RSI. This is our trading zone for RSI in a bear market. You can see we're in there. You can see put in 2 M's in the beginning of the bear market 2018. Just put in an M in the bear market. We just put in an M in this bear market of 2019. From the top of the move in 2017 to the bottom of the move, it retraced 38.2%, broke above it falsely, and then collapsed, right? This was about 100% pump. In this market, we had our downtrend. We had this false pump, broke above the 38.2, but closed underneath it, and we started to move down, right? So just all bearish news. So again, there's not really anything new to discuss until this thing makes some type of big move and breaks out of this zone that it's in. We really don't know which way to go on Bitcoin. I still personally believe that we probably will come down to fill in this gap, right? And again, some people are going to say, James, there's no gap there. Guys, this is a liquidity gap. If you're new to the channel, I've talked about this a lot. You can look it up on Investopedia if you'd like to. There's an article called Playing the Gap. This is a liquidity gap, right? Typically, once these things start to fill in, they don't stop until they're filled in, which would bring price back down around $7,500. If price falls back to $7,500, that's going to turn the momentum completely bearish. All of the bullish hopium that's out there right now, that's trying to prop up this market, it'll fade away very, very quickly. And once we drop below this level, there's no real support until we get down to this $5,000, $5,400 range down in this area here. Okay, there's old support from 2018 right around the $6,000 level, but it's important to understand that the older a support level is, the less relevant it is. Doesn't mean it can't stop there, but it just means that realistically, if it stops there, it's probably going to be a dead cat bounce and not much more. Okay, the next level of support is really down here around this $5,300, $5,400 area. And if we get there, I think it'll be a quick hop and a skip to fill in this liquidity gap here around 4,100. Could slide down to fill in this gap over here around 3,300. And if it breaks south of that, then I think we will have a repeat of 2015 where people thought the bottom was in. It was actually a false rally, and it went on and made a new low, right? If you don't know what I'm talking about, I will quickly cover this. I'm not going to dwell on it. But essentially this was 2015, this 2013 top here. It moved up, down. Right here was the bottom, right? It's what people thought was the bottom. It had this big rally, and people thought that the bear market was over and that it was going back up. Unfortunately, it put in this double top here. And it was also, if we scale our chart out, you'll be able to see this a little better. We had this descending triangle, right? And unfortunately, once that descending triangle broke, price actually went on. Instead of the $350 area being the low, price went way over here and actually made a low down around $150 to $200, depending on which charts you look at. Okay, so this to me is what I've been afraid of. And I say afraid, that's the right word. People think that I hope this happens, and I really didn't want this to happen. I really did want it to be a bull market. I was excited about buying the 61.8 fib and price continuing to move up and me having a very easy year. Instead, when we got to the 61.8 fib, we were already in a downtrend, which I talked about in previous videos. 61.8 is only for longing in a bull market. In a bear market, you're fighting the trend, and it's a dangerous move. So, now I'm concerned that this is probably what we're going to see. I'd say it's a 50-50 chance in my mind, right? 50% chance is a pretty big chance, okay? So I do believe that there's a very good possibility we will see that 3,200 in December was not our real bottom, and that our real bottom is probably going to be down around $1,300, okay? And again, if you're wondering what that's based off of, it's based off of the fact that we're in a new bear market. It's based off of the fact that we never retested that area of resistance flip support, and it's based off of the more market ages. In the case of Bitcoin, there have been papers about this. People have noticed that the market is starting to take longer to go through cycles, and so everybody assumed that December was the bottom because it was about 12 months, and the previous bear market lasted about 12 months. But it's entirely plausible that this bear market was actually a 2-year bear market, not a 1-year bear market, and that we'll see our low sometime in December of this year, or possibly sometime early next year. Okay, so I'm going to talk about the halving in just a second, because that's going to be the thing that bulls say, oh, no, you're wrong, the halving is coming up. Okay, so we'll talk about that in a second. But essentially, this is very, very possible. We do have a lot of dead space underneath this right here. And remember, if this does indeed come back down to that level, that would be a giant M, which is very, very bearish. Okay. So here's that old area of support that wasn't retested. Right here. Okay. Right around $1,300 or so. So I'll be keeping a close eye on that. So the argument that the bulls are going to make, by the way, if you see this green line, that's a trend line. That's the 4-year trend line or 5-year trend line, I think. Maybe more. Let's take a, no, that's the trend line from back in 2012, right? So that's a 7-year trend line. And if you look where it's at, it's right down around that line of support. Watch. Look at this. We've got our trend line merging with our line of support during this downward channel sometime in mid to late 2020, right? Now, here's what people are going to say. The bulls are going to say, you're wrong. There's a halving coming up, And every time the halving comes up, this market goes bonkers. Okay, let me explain something that people are not considering. In the past, the halving was a very private event. Only people who were hardcore Bitcoin people really understood about the halving and knew about it. It wasn't like a big thing, right? It was just kind of a community thing. Everybody and their brother knew about the halving coming up in 2020. People were already talking about it in 2017 and talking about it all through 2018. They were using it as an excuse not to sell in 2018. I personally believe that this entire pump to 14,000 was us actually front running the halving. I think this was all, people getting excited about the halving. I think it was being priced in, just like futures were already priced in, which is why we didn't get a pump when back launched. I think it was priced in, right? I don't think we're going to get a pump off of this next halving. I just don't. I'm not saying Bitcoin is dead. What I'm saying is I don't think the halving is going to fix this or, save this from going back down to these levels, okay? And again, I want to be very, very transparent about this. I've talked about this in other videos, but I'm going to reiterate this here. I make far, far more money in a bull market than I do a bear market. I'm not a bear because I want to make money from Bitcoin going down. I'm a bear because the charts are bearish. In a bull market, my software business booms. I talked about this in a previous video. I make enough money off of the software business to pay all of my bills, which means that my trading income is pure gravy money, right? It's money that I can add to my wealth portfolio. On top of that, in a bull market, I'm making money through trading itself. I'm also making money by holding Bitcoin, which means that I'm making basically 3 income streams. I'm making money from my software business, I'm making money from trading, and I'm making money from the Bitcoin that I'm holding to trade with. I make a lot of money in a bull market. In a bear market, my software business, it stinks. It makes almost no money whatsoever. In fact, this year it's operated at a loss. I make no money from holding coins because they're not going up, they're going down. My only source of income is my trading, which is enough to pay the bills. But again, it's not fun having one source of income. I would much, much rather be wrong, have this thing go absolutely apeshit bull, me jump back in, buy a few Bitcoin, use those Bitcoin to trade, and make money all 3 ways. I want to be bullish, but there's just nothing there, guys. This is the hourly chart for Bitcoin. This was that line of resistance. In yesterday's video, I said don't get confident in this line. It's been tested so many times, it's probably going to fail. And that's exactly what happened yesterday. It popped above it, came back down for a bullish retest, put in a beautiful W. See, this is the double bottom. That's bullish structure on an hourly, right? Bam. In fact, this is so good, I gotta zoom in and show you this. This is what you're looking for to get bullish, right? This is hourly, but we want to see this on daily, essentially. So we have down, up, that's a W, right? That's a sign of a reversal coming. Down, up, that's another W, right? Down, up, another W. Then we had this pullback, down, up, W. Here's an M, getting kind of sketchy, nope, W, right? And now we have another W trying to form. W's are what you're looking for to be long, okay? If this was a daily chart and I saw that, I'd be very, very bullish, okay? But again, right now, I think that this is basically an ascending triangle. I think our line of resistance is right up here around 88.80. I think this is going like this, and I'm hoping that it breaks north. Now, if you notice in this other chart, this 4-hour chart, look at this. 200-day MA, right around $9,198. 61.8 fib, right around $9,148. And if we look, the top of this downward channel is right around 9 grand. Okay, see this right around 9 grand. So if it breaks north of that, then it does have a shot of running all the way to 94.33 and testing that really, really important line of resistance. That's what I was saying earlier about that 4-hour chart. We had that downward sloping line right here, and that if it broke above it, that there was a good chance that it would just keep moving up. Not forever, right? But through this zone right up to this line of resistance up here. And here's the interesting thing, guys. If we start moving these Fibonacci levels around, if we start measuring the bigger move from, say, here to here, Well, now our 61.8 fib for this entire move, right, is actually right around 94.50, right up to this line, okay? Or it could get even worse and really punish the late bears. And if we measure this entire move, it's actually up around 98.22. And again, that would set a nice trap. If it pumps up there, bulls will be going long because this line will be broken, and then bears will be stopped out, and then it could be that it dumps from there, okay? So just a few different scenarios to keep an eye on. Obviously, I don't know what's going to happen. Nobody does. But that's what trading is all about, is trying to identify different possibilities and then having a plan in place so that you know how you're going to trade each one if they come to pass. It's just it's like I talked about in past videos. It's almost like a computer program. It's a whole bunch of if-then statements, right? If this happens, then do this. If this happens, then do this. All right? As far as the altcoin picture goes, I do see some life in some of the altcoins, but frankly, I'm not going to trade them because Bitcoin has this nasty habit of running the party, and I'd rather play it safe and not put my money in, okay? But just as an example, Litecoin's probably the one people are most excited about, or one of the ones people are most excited about. It has had some really strong movements lately, but for me personally, when I look at it, I don't really find anything to be all that excited about. This right here, oh goodness, too many lines. This blue line was a strong line of resistance. It's basically the neckline of this head and shoulders, okay, if you want to call that a head and shoulders. And you can see that it's active resistance here. It failed here, it failed, and it failed again today. So if it breaks above that, it could be a bullish sign, but until it breaks above it, I'm not that interested in it. If we take a look at EOS, EOS is kind of in the same deal. It's broke through its resistance here, but it still has all kinds of resistance above it, like right around this level. Hasn't been able to break through, so it's just trapped in a range. Most of the altcoins look like this. I thought I had a chart pulled up. Here it is. Okay, let me just give you one more example. So a lot of people are getting excited about like Ethereum. So if you look at Ethereum, I'm gonna put this on a daily chart. This red line was actually our trend line, and we broke it underneath it, and now we've come up to retest it from the underside. That's what's called a bearish retest. So I'm not excited about Ethereum because it's still under resistance. That being said, this yellow line is support. So it's essentially, Ethereum is just trapped in this range. If it breaks above this, it could be very bullish. If it breaks above, below that, then it could be very bearish. XRP looks, pretty much the same. So XRP, this is actually, let's look at a monthly chart. Well, there's not enough. Look at Kraken. I wanted more data. That's why I switched charts. Coinbase didn't have enough data. All right, so this is a monthly chart, and you can see that we had a line of resistance on the monthly right around this level, just over and over and over and over and over again. And so far, we have not broke above it, have been unable to break above it. This had a high of 31 cents. This had a high of 31 cents. Right, actually 31.497, and this had a high of 31.497, so a perfect tweezer top, or could be a perfect tweezer top, depends on how this thing closes, right? Very bearish, right? I'm not going to get excited about that. I think a lot of these altcoins are ready to move up versus Bitcoin. I think some of them are going to gain Bitcoin value. So for example, if they're worth 100 Satoshis now, they might go up to 120 or 130 Satoshis. So if you're trading to increase your Bitcoin, and you don't mind holding Bitcoin, there's probably some good opportunities right now. But if you're trading to increase your fiat, your US dollars or pounds or whatever it is you trade in, I don't necessarily think any of these are looking all that great, okay? That being said, guys, this video is probably one of the longest ones I've done. It's over half an hour depending on how I edit it, so I'm going to go ahead and wrap up there. Please remember, I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice, and nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and there's also links now where you can support the channel. This is James with Crypto Common Sense. Trade safe.